Ladies and gentlemen, NVIDIA, they recently breached new highs over $400 per share. Wowza. What a monumental achievement. They were temporarily in the $1 trillion market cap club. Now, this is because they were fueled by AI. Wow. Nobody talks about AI. How unique. Oh my gosh. NVIDIA stock is overbought and due to fall. Just look at the charts, according to Barron's. Or, how about you look at the business and determine how reasonable is the price today. It only takes just a moment, really, if you think about it. So, in a standard discounted free cash flow calculation, with a 10% desired return, if you projected 20% growth over the next 10 years, you would receive a fair value of only $70.54 based on the value of that future stream of cash flow. Now, when it comes to valuing NVIDIA, free cash flow per share and earnings per share are actually pretty similar over the last few years, and so you can really use either one. In this case, actually, the free cash flow number is a little higher, so it gives us the better number. Now, let's give them credit for their tangible book value. Okay, that brings it up to $78. Now, what does NVIDIA have to do to actually justify the current valuation of nearly $400 per share? The almost $1 trillion market cap. Well, first of all, let's say, after this 10 years of explosive growth, that their growth slows down but does not collapse down to inflationary levels. Okay, let's say they still have high single-digit growth. 10 after 10 years of extremely high growth. Now, let's also say that this AI thing really has some legs and that 20% just is not enough. Okay, 30% then. Well, okay, even with 30% growth over the next 10 years, that only justifies a fair value of $168.65. Okay. Well, okay. But really, let's say they really kill it. Okay. 35%. Even with 35% growth in their free cash flow, average per year over the next 10 years, we're still looking at a fair value of $233 per share. And that's if you only want a 10% return. Now, if you're buying NVIDIA as an individual stock and taking on the risk of them not executing on this, you should want more than a 10% return. You can get 10% in an ETF, for crying out loud. Okay? What about if we go with an 8% return? Even still, if you only wanted an 8% return with 35% growth over the next 10 years, that still only justifies a fair value of $293. And this is also saying that they average 35 for the next 10 and then still manage a pretty beefy 9% growth rate for the next 10 years after that, which once they've done this first 10 years of 35% average growth, it's really, the fact that you think that they would sustain, a high single-digit growth rate for an additional 10 years after that is just, it's mind-bogglingly, the amount of free cash flow that we'd be talking about after this would just be absolutely insane. But even still, let's keep going. Okay, guys, we're almost there. Okay, so if you're happy with an 8% return and think that they will grow 39% a year in their free cash flow over the next decade on average, you would be about fairly valued today. Now, what if you wanted a 10% return? Well, you're still pretty overvalued. But let's say you want to beat the market, all right? And you want a 12% return for taking the risk of buying an individual stock. Well, they would need to grow their free cash flow by 46% and change per year over the next 10 years for you to realize a 12% annual return. Now, what do you think the chances of that realistically are? I've honestly never really been able to wrap my head around the way people tend to value some of these tech companies. It seems like all they have to do is talk about how they're getting into AI and, growing this and growing that, and people just say, oh, they're going to be growing it all the way to the bank. First of all, doesn't necessarily translate to the bottom line. Second of all, this amount of sustained growth for this period of time is just, it's ridiculous for a company that's already the size of NVIDIA, okay? This isn't a brand new startup anymore, okay? NVIDIA's been around a long time. They were founded in 1993, okay? And honestly, this just boggles my mind in so many ways, okay? I would have been hearing arguments when they were near their 52-week lows of $108 as to, how that might make sense. But in this current realm, I cannot possibly get behind this current pricing for NVIDIA, okay? So that's just like my quick 5-minute take on the stock and its new highs. Feel free to roast me in the comments if you disagree and think I just don't understand the future, bro. Just remember, though, that 23, 24 years ago, anything that said it was involved in the internet, that was the future, and that all got inflated. Leading up to the '08 crash, it was anything real estate was awesome and you couldn't lose. And now, the latest thing is, it's AI, and not too long ago it was blockchain. But look what's happened with companies that were involved in that area. So anytime something is, going parabolic on some new buzzword, frankly, I expect to see it come cratering down at some point when people say, well, hey, at some point I care about the cash flow in this thing. And what the bottom line really is. The bottom line eventually will speak the loudest, even though in the short run, people just think about what's in the news and what the headlines are saying. So keep that in mind when you consider getting involved in something like this after a meteoric rise. It gave a little bit back, but trust me, I don't think that this will be by any means the last time we see a dip in a company like NVIDIA or any other stock that's pumping itself based on AI in the near future, okay? So just be careful, approach with caution, and come up with a valuation that makes sense for you based on what you think are realistic numbers. Take it easy, everyone, and have a wonderful afternoon.